And students, in case you are not able to see the sessions live, we are having the recorded lectures, but we advise you that you join these sessions live. And the timings also we have kept in such a manner. They are from 7 to 9:30 in the morning, and in the evening it is from 6 to 8:30. So you will have comfortable times. Get up early, make yourself fresh, and start the class, and prepare yourself for the exams. Students, my one advice to you as Director of Board of Studies is that don't as such think that you have to face the exam, because every day we are facing an exam. We are testing our own self. And once we are through, once you become the chartered accountant, then also the test will always be there, because you have to prove yourself. And so that is not, you don't take it that as if it's really this very big exam, because if you are prepared, you know the concepts well. Exams are something, I think it is not really be that tough. So first you need to be mentally prepared, and then you appear for the exams. And students, these sessions are done in such a manner, and the faculty who's there is going to take you through each topic, will explain you the basic concepts of the particular chapter, particular standard. And today we are having the accounting session. We are starting with accounting paper 1, group 1, and CA Sanket Shah will be taking you through, and he'll make you understand everything, make the sessions very interactive, pose as many questions as possible. And students, my one advice to you is the questions which he'll be doing it for you and will be giving you for practice also. Practice them with your own hand. Because if you practice with your own hands, yes, you will know where you are lacking and which step you are missing. So be very clear on the concepts, be very clear which step you have to attempt. And students, and during exams also, try covering all the steps. You know that the marking is stepwise, so you should not miss on the steps. Don't worry that my balance sheet needs to tally. No, balance sheet will tally. That is not a problem. But if your steps are done, automatically it will be very easy to tally the balance sheet, right? And students, in the morning will be taking you to the first group, and in the evening, second group will be taken, so that students, if you are preparing for both the groups simultaneously, you can attend morning one session of group 1, and in the evening you can attend session of group 2. And in case you are only appearing for one group, you feel comfortable, you attend the classes, so that you are very comfortable for the forthcoming exams. And students, this is the initiative of the Board of Studies, and with the guidance and support of our President, Vice President, our Chairman CA Devashish Mitra, and the Vice Chairman CA Sushil Kumar Goel. We are here with you, and the sessions are very live for you. And BOS is always there for you for any problem you face, any issue you face, because we are having ebooks, we are having the material is also uploaded on our BOS knowledge portal. Keep visiting the BOS knowledge portal for the important announcements, so that you are abreast with the latest developments. And now our Chairman C. Devashish Mitra has also joined. I welcome him. Sir, we welcome you for the first class of the intermediate for May 21 exams. So over to you, sir.
Thank you very much, Vandana-ji. I hope you can hear me, Vandana-ji.
Yes, sir, I'm able to hear
you. Yes.
Right.
So good morning, everybody listening to me, and good morning, my student friends. I am Devashish Mitra, Chairman BOS. speaking to you on the first day of our classes for this for the intermediate course. Vannaji, who has been driving force behind these classes, these virtual classes, she has already addressed you. Now, let me tell you, you see, when the pandemic struck, and you see, we said how to reach out to the students and how to ensure that the students continue to remain updated. What we did, we started off with the revisionary classes, virtual revisionary classes, and please note these are all free. The revisionary classes went off very well. Then we started the classes, the virtual classes. Then we started the virtual classes for the November 2020 exams. Even that was well received. And now, of course, we are having the virtual classes for May 2021 exams. Please note, the virtual classes for the finals had already started earlier. The virtual classes for the foundation started from the 1st of February. And these virtual classes for intermediate have started from today. Now, when we decided to go for these virtual classes, what was there in our mind? The first issue that was there in our mind was that the virtual classes should be free. We should not charge the students in the midst of this pandemic. Now, whenever anything becomes free, always there is a feeling that what about the quality? Please note these virtual classes have some of the best faculties in the respective subjects. And then we also have guest faculties. For example, in the earlier virtual classes, we have had teachers or professionals like Girish Ahuja addressing us, Amarjit Chopra addressing us, T.N. Manoharan addressing us, P.R. Ramesh addressing us. So many, top-class teachers have, top-class professionals as well as teachers have addressed these virtual classes. The feedback has been good. And you see, it is very important that all of you who are going to attend these classes continue to give us feedback. Even if the feedback is not good, please continue to provide us, because that will help us in improving the quality of the classes. Now, what we are doing in these virtual classes is we are trying our best, and this is the instruction that has been given to all those who are taking these classes, that learning should be fun and interesting. Learning should be full of illustrations, so that a student, when he attends these virtual classes, his concepts are very much clear. And when I talk about concepts, please note that we have this, the course as it stands has this case studies, the multiple choice questions, all those aspects are there, and case studies especially. Now, why do we have case studies? Because we want to test the application of your mind. Rote learning is totally discouraged in the virtual classes. It's totally discouraged. So I would suggest that when you attend these classes, attend with a lot of attention, and at the same time enjoy the classes. Interact with the faculty. And when I talk about interacting with the faculty, I would say that attend these live virtual classes in a live manner. We also have recorded version of these classes, but do not really go for the recorded version, because there is a greater fun in attending live classes, because you can interact with the faculty. Ask questions, even if you think that they are very stupid. Ask them, because that will also help you to clear your doubts. Now, those of us who are appearing for intermediate, you must have also seen the study materials that have come out. The study materials are full of illustrations, the new study materials. They have been done after months of efforts. Have a look at them. Enjoy the illustrations. It is very important that you pick up the pen and start, doing those illustrations yourself, so that when you do it, if you have any doubt, it gets cleared. Sometimes we have this tendency that we just see the illustration and then we start, just read it, and we think that we know everything. That is not the way to go. The way to go is, take up your pen and start, doing the illustrations at home. And then if you have any queries or doubts, you can even take them up in these virtual classes that we are organizing. You will get the student chartered accountant every month. The student chartered accountant has, you see, capsules. Now, these capsules are very, very useful for quick learning, for, you see, for revision. Please go through them. They will be of great help to you. These capsules of the sometimes the student chartered accountant comes and we just keep it in our house and don't open it. Open the capsules. You see, you will see that we have given a lot of examples there, and you'll find that these examples are of great benefit and of great help to you in understanding the respective subject. So you see, these aspects, of course, are very important. The mock tests, as you go ahead and as this course nears its ends, the virtual classes, you will have the mock tests. And the mock tests, you see, if you do it seriously, let me tell you, my student friends, helps you a lot in preparing for the main exams. Helps you a lot in preparing for the main exams. So do that. Do carry. You see, appear for the mock tests with a great deal of sincerity. India is, you see, this is one example which I have given in the foundation when I was there on the 1st of February. Let me give you the same example today to all of you. India is now playing England, not doing very well from whatever we have seen. They might have to go for the follow-on, but that is not important. What is important is the way India played Australia in Australia. Please note the way they have played and defeated Australia is something very, very, a proud achievement for us. You must have also seen Gavaskar. Yesterday, I was seeing Sunil Gavaskar commentating on this thing. He is more than 70 years now, but look at the way he's commentating. But then Sunil Gavaskar used to play in 70s and 80s. And at that time, when he used to play without helmet. He is not a man who is more than 5 feet 2 inches. According to me, the finest opener India has had. Now, you see, in the 80s, he used to face the fearsome bowlers of West Indies, Australia, especially West Indies. Those days, West Indies had to see such fearsome bowlers. Now, Sunil Gavaskar will come and practice for hours together in Mumbai whenever he was in India. Now, this gentleman who used to go to Bombay, who used to see him practice, he would watch Sunil Gavaskar do the same thing again and again. So one day he approached Sunil Gavaskar and asked him that, "Sir, don't you get bored doing the same thing again and again?" The reply of Sunil Gavaskar was that, "I'm passionate about the game. I enjoy the game, and I think if I have to be successful in facing the fearsome bowlers, fast bowlers, I have to work hard." So the same principles apply to you, my dear students. Be passionate about the course, enjoy the course, and work hard. And success will be at your doorsteps. With these words, I wish you the very best in all your future endeavors. Make full use of these virtual classes and enjoy the classes passionately. Thank you very much.
Thank you, sir. Thank you for your words of wisdom. Students, you must note what sir has said. Keep them, just make them as your Bible. And the key words that practice with your own hands. And if you practice, nobody can stop you. And enjoy your course. If you have passion for the course, you will love it and you will be very successful in your life. Thank you, sir. And now I'll invite CA Sanket Shah to start his session and enjoy. And he will make the session very interactive. And I think you will really enjoy it. And towards the end of the session, please give your feedback also. Right? Thank you. Over to you, CA Sanket.
Yes, ma'am. Thank you. Thank you, Debashish sir, and thank you, Vandana ma'am. Hello, students. A very good morning and very warm welcome to all of you. Board of Studies has taken a big initiative to start the virtual coaching classes, and I'm thankful to Board of Studies and ICI for giving me the opportunity to conduct this session of Paper-1 accounting. I am thankful to Vandana ma'am, Debashish sir, Sushil Goyal sir, and Seema Gupta ji. Now, first I will introduce myself. I am CA Sanket Shah, a faculty at all levels for accounting, for foundation accounting, for inter-account costing, financial management and advanced accounting, and for final level financial reporting. Now, as this initiative is free of cost, I urge you all to take the full benefit of these classes. This is the second batch of virtual coaching classes. And now we'll start with our main syllabus. So friends, syllabus, I have divided our syllabus in 3 parts. Accounting standard, small topics and big topics. Normally accounting standards have weightage of 15 to 20 marks for group 1, because group 2 we have minimum 25 to 30 marks weightage. So accounting standards are very important from exam point of view. Small topics, you have to solve it thoroughly, because normally 10 to 15 questions in each topic. So in each topic, you have only 15 to 20 questions. If you are clear with all concepts, you will definitely score 100% in small topics. And in big topics, my suggestion, please do at least 50% of posting, because posting, you will get definitely marks for posting. And if you want exemption, you have to thoroughly study small topics and accounting standards, and for big topics at least do posting part. So you have in your syllabus total 8 accounting standards. So I won't go in detail, but you have total 8 accounting standard. From that, one cash flow statement and second one is accounting for investment. These 2 topics are in detail in small topics also. So accounting standards, you have to study only 1, 2, 10, 11, 12 and 16. Then because you have some topics for cash flow statement and accounting for investments. In small topics, again, a list of 8 topics: profit or loss pre and post incorporation, accounting for bonus issue and right issue, redemption of preference shares, redemption of debentures, investment accounts, insurance claim, and last one is hire purchase. So there are total 7 small topics. So there are total 7 small topic, and last one is departmental account. Departmental account is also in one of the small topic. And big topic, you have only 3 topics, big topics list. One minute. In big topic, you have financial statements, wait. Financial statements, account from branch accounting, and last one is account from incomplete record. So there are only 3 big topics having weightage of 20 to 30 marks. So now what is our action plan? One minute. One minute. Okay, wait. Yes, what I exactly want. 1 minute, my technical problem is there. Otherwise, I will close all windows. Just close it. Okay, sorry. So in big topics, we have financial statement of companies, accounting for branch, including foreign branches, and accounts from incomplete records. Now, what is our action plan? What you have to maintain? Books to be maintained in the class. Number 1 is accounting standard and concept book. You have to maintain total 3 notebooks. One is for accounting standard and concept book. Second one is illustrations solution book. And last one is practice notebook. Now, accounting standard and concept book, you will write all theory concepts and hints in it. So all important points, adjustments, you will write it in the concept book. It is useful for revision purpose at the end. Now, practical solution book is for solving illustrations of our study material. We are going to solve not 100%, I'm telling you, because of time limit, but we will solve definitely 60% and more illustrations of study material. And last one is very, very important. Practice notebook. This practice notebook, problems to be solved by setting a timer and to be solved within a specified time after solving all illustrations in class. So practice is very important. So at the end, so you're doing it for the 3rd time, problems to be solved by setting a timer. First time, before I will explain you all concepts in detail. After that, you go through study material illustrations. First, you try to solve all illustrations of study material. I'm not expecting that you should solve 100%. Try to solve at least 30 to 40%. Then after that, I will take it in the class, all difficult illustrations and examples. And after that, I need your practice. So solve it for 3 times. If you do practice regularly, you will definitely get a success after 3 to 4 months. And practice is very important because accounts paper are normally lengthy papers and students are not able to solve all examples or all all questions of the paper in timing. So I request you all to be very, very sincere from the first day, and you have to maintain all these 3 notebooks. Now, students to be equipped with the following weapons. I will call it as weapons because this is the accounting session, and therefore you need black pen. Black pen, why? Because you have to solve your paper using black ball pen only. So black pen is mandatory. Red pen, it is only for important adjustment because it is very difficult at the end to revise full topic, and therefore we need only important adjustment, and that we are going to write it by red pen. Next one is you need scale, pencil, eraser, and last one is calculator. Calculator is very, very important. So now, quick recap of foundation accounts. I just want a recap of foundation accounts. How many of you know basic rules of accounts? Basic rules of accounts are very important because at intermediate level, you don't have to focus on journal entries, but you have to visualize all ledger accounts. And therefore, I need basics very strong. And friends, tell me what are rules of accounts fast. Yes. Yes, please tell me basic rules of accounts. So I will revise it first. Rules of accounts are divided in 3 types. Number 1 is a personal. Number 2 is real. And number 3 is nominal. Yes, I want answer from your side. Personal rule. Actually, this is not given in any book and our study material, but any person, first he is a debtor and then he becomes creditor or giver. So due rule is very, very important. Debit the debtor, credit the creditor. Though this rule is not given in study material or in 11-12 standard, but this rule is important because any relationship, if I sold goods, then he will be debtor for me. And if I purchase goods, then supplier is creditor for me. So any rule starts with debit the debtor and credit the creditor. And after that, debtor becomes giver and creditor becomes receiver. So second rule is very important. Debit the receiver, credit the giver. Real rule, debit what comes in, credit what goes out. So real rule is debit what comes in, credit what goes out. And last one, debit all expenses and losses, credit all incomes and gains. Remember friends, personal and real account are carried to balance sheet and nominal accounts are transferred to P&L. So this is just the basic introduction. Now we will start with first chapter. Okay, so first chapter. So friends, we are starting with first chapter. Please maintain your notebook properly. I want now your notebook. So write down name of topic, Introduction to Accounting Standard. Write down it. Introduction to Accounting Standard. Introduction to Accounting Standard. What we are going to cover in this? So we have to cover total 9 concepts. I will go one by one. So first one is introduction. So first one is introduction. Yes, please carry your notebook. Yeah, now tell me, what is GAAP? GAAP. You have to tell me, what is GAAP? GAAP means generally accepted accounting principles. GAAP means generally, write down, GAAP, generally accepted accounting principles. Basically, in India, we have accounting standards. We also have Ind AS that I'm going to explain in the later part. But first understand, we have accounting standards. Now, these accounting standards basically divided in 2 parts. One, write it in the margin, accounting standard 1. One is accounting standard and second one is the disclosure standard. So accounting standard, write it properly, accounting standard in the margin itself, AS, basically divide it in 2 parts, accounting standard and disclosure standards. Yes, better, write it. Accounting standards, basically it needs accounting entry, it needs measurement, it needs presentation, and it needs disclosure. RMPD. RMPD means recognition, measurement, presentation, disclosure. RMPD. RMPD. R for recognition, M for measurement, P for presentation, D for disclosure. So what is exactly recognition, measurement? I will tell you. But remember, accounting standards means it needs RMPD analysis. And disclosure standard is only for disclosure purpose. For example, we have accounting standard 20 in which we do not have any entry. We just have to understand what is the presentation in profit and loss account. So in disclosure standard, AS20, we disclose it in the P&L account. Or you may have accounting standard 17, which is segment reporting. It is also only disclosure. So there is no accounting entry for this. But suppose if you have accounting standard 10, property, plant and equipment, it needs accounting. Means we have to pass journal entry, capitalization of asset, at what value, it is measurement. We will then present it properly and disclose it, policies that we are adopting. So friends, A's are divided in two parts. One is accounting, second one is disclosure. In accounting, we need RMPD analysis for which we pass entries, and disclosure standard, we disclose it in the notes to accounts. So now, what are generally accepted principles? Write down GAAP are common set of accepted accounting principles, standards, and procedures that entity must follow when it prepares financial statements. Sir, what do you mean by financial statement? Financial statement means balance sheet, profit and loss account, cash flow statement, statement of changes in equity, and last one is notes to accounts. I will show you what is exactly financial statement. In annual report of any company, you will get all these details, financial statement, because it is not possible to give journal entries, trial balance, means books of accounts in simple language. Normally in financial statements, we have balance sheet to know the financial position, P&L to know the performance statement, cash flow statement, what is the cash inflows and outflows from different activities, notes to account, statement of changes in equity for to know what is the balance at the beginning and what is the balance at the end of equity capital, and what are notes that company is following is given at the end. And for that, we need common set of accepted principles, standards, and procedures. So remember, principles, standards, and procedures for the entity must follow when prepares and presents the financial statement. Have you written this? Okay. So this is the common set. Okay. So friends, now you are clear with the definition. What is GAAP? Now in India, we have accounting standard and Ind AS, but outside India, you have international financial reporting standard. If you are in US, you have US GAAP. US GAAP means US generally accepted accounting principles. So friends, now we will divide it in two parts. At international level, it is IFRS. At international level, it is IFRS, International Financial Reporting Standards. So remember the full form. IFRS, International Financial Reporting Standards. Now you can see it is not accounting, it is reporting. Why it is reporting? Because it is accounting plus disclosure, and therefore they named it as International Financial Reporting Standards. Okay, so written in India, we have accounting standards and Ind AS. So accounting standards and Ind AS. Remember, now what is Ind AS? That we are going to cover in the next part only. So Ind AS is a different, there is limit, or there are some criteria for adopting Ind AS, and that we are going to see in the last part. So accounting standards, that is issued by ICI, that I will tell you. So in India, we have accounting standards and Indian accounting standards, Ind AS. And Ind AS is just introduced in 2015 for having globalization or global, it matches with the global standards, and therefore we introduce Ind AS. So that we are going to see now. Have you written at international level and India? Okay. Now what is accounting standards? So accounting standards are written policy documents. Write down. Accounting standards are written policy documents. So accounting standard, if you visit on our website, you will get in resources that we are following accounting standard, and you have all accounting standard list at one place. If you visit ici.org and if you click resources, you will get all accounting standards at one place. And this is the accounting standards which are written policy document which issued by. Now who is issuing it? Remember, issuing it by ICI only. But Ministry of Corporate Affairs, they want accounting standard. They have, means we are guiding them, and government, example, Ministry of Corporate Affairs for corporate entities. So for corporate entities in consultation, or they are issued by Ministry of Corporate Affairs and in consultation with NFRA. Now, what is NFRA? It is National Financial Reporting Authority, and it helps to Ministry of Corporate Affairs to prepare, or accounting standards are prepared by ICI, but it is for non-corporate. But NFRA, they also help in consultation with the government. In consultation with the NFRA, government issues accounting standard for company. So remember, it may be one MCQ, government, example, MCA for corporate entity, for corporate entities in consultation with NFRA. So accounting standards are written policy documents issued by government for corporate, and for non-corporate it is ICAI. So Institute, our dear ICAI, Institute of Chartered Accountants of India, issues accounting standards. Now accounting standards deals with, remember I already explained you RMPD analysis. So RMPD, remember, recognition of events and transactions. Second one, we have measurement of transactions and events. Now, what is transaction and what is event? You already covered at foundation level, but I will revise it. Transaction means any happening like purchase, sales, wages paid is a transaction. And event means end result, like getting net profit or you left with the closing stock is event. And this recognition of events and transactions, accounting standard, it deals with recognition of events and transaction, measurement of transactions and events. Next one is presentation of transaction and events, and last one is a disclosure requirements. So friends, accounting standard deals with, write down all these four words: recognition, yes, then write down measurement, presentation, and last one is disclosure. Okay, please write it. Vanshika ji, I will share this PPT, not this PPT, but I will give you PDF format, proper PDF format. Then, yes, many students answered it correctly. What are basic rules of accounts? Very good, beta. Our session is interactive session. So sometimes if I am on the concept, I can't read all your queries. But yes, after that, yes, you answered it correctly, all of you. After writing, please, Kushalji, yes, you have written. Thank you. So now we will move to next concept. Now, what is the disclosure? Can you tell me what is the policy? Policy matlab kya hota hai? So can you explain what is policy? So I will show you some notes to accounts. Notes to accounts of ITC, Indian Tobacco Company. So ITC, yes, I have given you notes to financial statements to make it very clear and what is exactly going in the practical life, and therefore I have given you some notes to accounts. You can see there is convention. Convention they have given, it is to prepare financial statements in accordance with the applicable accounting standard in India. A summary of important accounting policy is set out below. So this is your convention. So they have given it very clearly, and the financial statement means balance sheet, profit and loss account, that cash flow statement, statement of changes in equity, notes to accounts in accordance with relevant presentation requirements of the Companies Act 1956. Now, basis of accounting. This is the second policy. Normally in India, we are followers all, not all, because it is a first accounting standard in which you have fundamental assumption that going concern, consistency and accrual. Accrual concept says, yes, debit, you have to expense and incomes. You have to record all expenses and income on accrual basis only. So basis of accounting is to prepare financial statement in accordance with the historical cost. Historical cost we already covered at foundation level. Historical cost convention modified by revaluation of certain assets. Now what is revaluation, sir? I'm going to explain you. This accounting standard 10, property, plant and equipment. I will definitely explain you. And all assets and liabilities have classified as current and non-current. So wait. Now this basis of accounting, we are going to see this in accounting standard 1. So depreciation in accounting standard 10, we are going to see. Fixed asset, these are some notes to accounts. These are the disclosure parts which are given in notes to accounts. So this is a disclosure part. Every standard in last side, it is telling about disclosures that have to be presented in notes to accounts. Remember, so fixed asset is the last one. Inventory. So these are some policies that I have collected for you. So this is only for practical point of view. Okay, exactly what we are going to understand in accounting standard that is practically implemented by all listed companies. That therefore I have given you notes to financial statements. Okay. Now next one. Again, one Bajaj Finance. Bajaj Finance, you already know who is Bajaj Finance. They are financing all your small equipments also. So Bajaj Finance also basis of preparation, uses of estimates, plant and equipment, depreciation. So all these are notes to accounts. And these notes to accounts are given by accounting standard. What they have to write in notes to accounts is given by our dear ICAI. And we have to implement all these notes to accounts in our real life also. You can see there are different notes to accounts. Means how to present it is an art of the management. It is not mandatory that you have to write in the same way. It is art of every management. And if you see, we have excellence award for presenting financial statements. अब जी न्यूज पे जाओ, you will get the information. अब भी का तुरंत ये आज अभी 2-3 दिन में आप वीडियोस में भी चेक कर सकते हो. You have excellence award का पूरा अपना ICI का एक वीडियो मिलेगा आपको जी न्यूज के ऊपर, हिंदी में है. So this is the actually how to present your notes to account is an art. And remember, we have to understand this art. Okay, so now let's move to next concept. Sir, what are benefits of accounting standards? Can you tell me what are benefits of accounting standard? Yes, benefit, there is standardization of alternative accounting treatment. Standardization of accounting, alternative accounting treatment. What is exactly, sir, alternative accounting treatment? What is alternative accounting treatment? Sir, there are n numbers of methods. Sir, already studied at foundation level. While in valuation of inventory, there is FIFO, there is LIFO, there is weighted average. Sir, which policy we should follow? And this is given by accounting standard. Now, accounting standard 2 says in India, we have only 2 methods. One is FIFO and second one is weighted average. So this guidance is given by our ICAI, accounting standard 2. And whenever there are accounting alternatives of accounting treatment, we have to follow our ICAI accounting standard. And it will definitely क्या करेगा, आपका confusion दूर करेगा. Oh sir, there are many treatments, FIFO, LIFO, weighted average, straight line method, WDV method. Exactly बताओ ना sir क्या करना है. So accounting standard will tell you the standardization of alternative accounting treatment. Okay. Now, reduce confusing variations in accounting treatment and presentation. I will use थोड़ा सा हिंदी because थोड़ा connection लगता है, थोड़ा सा एकदम 1% हिंदी, otherwise 99% is in English only. So standardization. So Prakash ji, yes, definitely I'm going to explain in English only. So don't worry, only 1% Hindi. So standardization of alternative accounting treatment, it reduces confusing variations in accounting treatment and presentation. Now write down in your notebook, benefits of accounting standard. Benefits of accounting standard. Write down, my friend. Benefits of accounting standard. Corporate, yes, Prakash. Yes, Hussein Sheikh. What is the difference between corporate and non-corporate? Corporate means company, and non-corporate means, you will understand it at income tax also. Sole proprietor, partnership, association of person, body of individuals are all other than cooperative societies, also other than corporate. So for corporate, Ministry of Corporate Affairs, they are on the apex side. And non-corporate, we are following ICI for accounting standards. So what is person definition, you will understand it in the income tax. So person means a sole proprietor if he's a businessman, partnership firm or cooperative society, AOP, BOI are all body of individuals, association of persons all are non-corporate entities. Okay. Okay, some students are saying, sir, we are from Andhra. I'm using English only 1 to 2 sentences in Hindi. यार अपनेपन लगता है बस बाकी कुछ नहीं. Okay, next one. Standardization of alternative accounting treatment. Then you have requirement for additional disclosure. So second benefit is that requirement, write down, requirement for additional disclosures. Requirement for additional disclosure. Additional disclosure, accounting entry is not only important. How you adopted accounting policy is important. And in some cases, statutory information means it is not statutorily given. Yes, this is applicable. In certain areas, it is not statutorily required to be disclosed. But accounting standard says, for transparency and for users understanding, it is important to disclose it additionally, and that is the benefit of S. Sometimes in statute they have not mentioned you follow this accounting standard, but additional disclosure is given in our accounting standard, and this accounting standard says you need additional disclosure, and therefore requirement for additional disclosure not required by statute but by accounting standard. Okay, so standardization of alternative accounting treatment. Then you have requirement for additional disclosure. Next one. Next one, for comparability of financial statements. Sir, if I want to compare my financial statements, suppose if I'm a Reliance company and I want to compare my statements with Tata company, so there must be disclosures, notes to accounts, policies which are followed by Reliance company and policies which are followed by Tata company. And to make it comparable, accounting standard will give you guidance. So third benefit, it is comparability of financial statement. Write down comparability of financial statement. Now there are two views. Andhra versus Bihar. One is saying, sir, please explain in English. And second one is saying, sir, please explain in Hindi. How I should behave? Please tell me. Okay, no problem. For Hindi, I will give you separate session. No problem. Those students who want Hindi, it will be recorded session. I will ask Vandana ma'am and Seema ma'am about this, and suppose if they allow me, I will give you Hindi session also. So don't worry. Those students from Bihar or any other MP, UP or Maharashtra, Gujarat, yes, I will provide session in Hindi also. Don't worry. Okay. Okay, have you written comparability of financial statement? Yes. So for comparability, it is intra-enterprise comparison and it is inter-enterprise comparison. Now, what is the difference between intra-enterprise comparison and inter-enterprise comparison? If intra means comparison of financial statement of same enterprise. Reliance company will compare its own books of account or own financial statement of 2018-19 with 1920 with 2021, and this comparison of same enterprise over number of years is called as intra. It's called as intra comparison. What is inter? Inter is comparison of financial statement of different enterprise for same accounting period. For example, if I compare Bajaj and ITC here, okay. So if I compare different enterprises, in that case, it will be inter-enterprise comparison. So write in one line only. Intra means different number of years and inter is different enterprises. Okay. Okay. Some students are asking me questions like, sir, whether accounting standards override statute and all. I will explain it. Please keep some patience. We will go one by one concept, what is as per study material sequence. And at the end, I will solve all your queries. So, Bishal Dev, please wait for some time. Yes, Khushiji, your queries are reaching to me because many students are asking queries. So it is very difficult for me to solve all your queries. I will take it at the end. First, we will complete our session and at the end. So if I think this is the important query, I will consider it in the class. Otherwise, I will consider it at the end. So please don't disturb me in between. And I'm sorry for that. So I will solve all your queries at the end. So please keep some patience. We will solve all of your queries. Okay. So third one, we have seen what is comparability of financial statements. And last one is reduction of scope for creative accounting. Now, there are many people who are using this accounting standard to, yes, for false purpose or for fraud purpose. And this creative accounting means twisting of your accounting policies to produce financial statement favorable to a particular interest group. So how? Because some people want to inflate their profit. Why? Because they want investment, and for having investment, they are making their profit very strong by using this accounting principle, and therefore ICAI has given you, you have to follow it in the same way. And for reduction of scope for creative accounting, this is the last benefit of accounting standard. In exam, you may have question of 3 to 4 marks. What are benefits of accounting standard? And in that case, you have to answer number 1. Please write down only important points. Don't write it in detail, because in study material, it is given in detail, and we are writing it in the concept book. And concept book is very, very important. In that, you have to revise it at the end, and so make it very short. Okay, so what is the first benefit? Standardization of alternative accounting treatment. Number 2, requirement for additional disclosure. Number 3, comparability of financial statement. And number 4, reduction of scope for creative accounting. Okay. Yes, I am giving you time. Don't worry. Comparison means, yes, only financial statements. We are comparing financial statement. I already explained you balance sheet, profit and loss account. Then you have cash flow statement, notes to accounts, and statement of changes in equity. Okay, please be live in the classes. Okay, so reduction of scope for creative accounting is the last benefit. Now friends, we will move to next concept. What is the standard setting process? I will give you break at 8:15, 8:20 or 8:15. So 5 minutes break after that. And then we will continue the session. So now next one. Next is, okay, one question. If there is any conflict, if there is a conflict between statute and accounting standard, I'm saying accounting standard, not about Ind AS. Statute will prevail over accounting standard. Oh, sir, Ministry of Corporate Affairs will prevail over ICIS beta. Yes. Suppose we can't go beyond statute. So if, remember, if there is a conflict between statute and accounting standard, who will prevail? So definitely accounting standard is not going to prevail, but statute will prevail. Statute, Ministry of Corporate Affairs. Okay. Vishalji, I will give a separate session on in Hindi. So that suppose if Board of Studies allows me, I will definitely, I'm interested to take it in Hindi also. Don't worry. But that will be recorded session. I will ask Board of Studies. Okay, what is the standard setting process? Now this is the second standard. Write down next concept. Now please make it sure you have to write it in the concept book, but we will give you concept numbers. So we will first give concept numbers. Wait. Concept numbers. So first concept one, write concept one for introduction. This is accounting standard definition. That is accounting. You have written what is GAAP, generally accounted accepted principles, that common set and all. That is concept number one. Now, concept two, write down concept two, benefits. For concept two, give number to concept two for benefits. For benefits. Okay. So for benefits in our concept book, we are going to write only names. Number three, concept three. Now write down concept number three. Standards setting process. Standards setting process. What is accounting pronouncement? Beta, I will tell you in the next chapter. So don't worry. Accounting pronouncement, Mayurji. Sir, can you explain reduction of creative accounting? Reduction means creative accounting means some people are using for fraud purpose. Accounting standards they are using for fraud purpose like Satyam. and they are inflating their profits so that investor will get attract, because they will use all accountings and like borrowing costs, they will capitalize interest, or they may debit the interest expenses, and they may capitalize their interest and their profit will get up. So that is the reduction of creative accounting. Okay, so standard setting process. So next one is a standard setting process. Don't write it. Bodies that are involved in standard setting process, main body is Institute of Chartered Accountants of India, and they took leadership role in constituting accounting standard board. So very, very important. We have accounting standard board, and ICAI has taken an initiative to form the accounting standard board. I will show you. If you visit our institute site, you will get here, it is given committee. And in committee, if you click on accounting standard board, you will get that our chairman, Mr. Vijay Kumar Ji, he is chairman of accounting standard board. And this, under his leadership, we have other members, Vice Chairman Sanjeev Ji, Atul Gupta Ji, ex officio, Nihar Bhai, Jay Chaira. So these are the members which are under accounting standard board. So we have committee for accounting standard. Okay, so next one. So we understood. So this committee takes initiative for forming accounting standard. Why they feel there is a need of accounting standard. Why there is a need? Because normally all accountants, they are following different practices or different policies. Some are debiting interest expenses. Suppose you have taken an asset on loan and interest on it. Some accountant, they are debiting it to profit and loss account, and some accountants are capitalizing interest, means they are showing it addition on the asset side. And in that case, accounting standard needs explanation. There is one accounting standard 16, and accounting standard 16 says if it is only qualifying asset, in that case only you have to capitalize your interest. Sir, what is qualifying asset? Qualifying asset means asset which takes a substantial time to get ready for its intended use. This is given in accounting standard 16. I will definitely tell you accounting standard 16 in next sessions. But remember, now there is confusion. What is confusion? Whether interest should be added to asset or whether interest is to be recorded in profit and loss account. And when you think there is difference of opinion, and in that case accounting standard board come into the picture and they introduce accounting standard. It's very simple. So whenever there are different opinions, like for example, if I paid salary, there is no difference of opinion. Salary account debit to cash, Jammu Kashmir to Tamil Nadu, same entry will be passed. Okay, so here there is no confusion. But having asset on loan, interest expenditure, there is confusion. If there is exchange rate, there is confusion. Government grant, there is confusion. And whenever there is confusion for accounting treatment, ASB will come into the picture. Accounting Standard Board. Because ICAI have many committee. So there is specific committee, Accounting Standard Board. And now this ASB, Accounting Standard Board, considered IFRS. Now what is IFRS? International Financial Reporting Standards. My friend, at the beginning of the session only I explained you what is IFRS and what is IS. That I'm going to explain you later. What is the difference between IFRS and IAS? Because we are following Ind AS, which are based on the IFRS and International Accounting Standard. So later part will be covered for IFRS and IAS. Okay. Now, composition of Accounting Standard Board. Now, this Accounting Standard Board, it includes representative of industries like ASSOCHAM. Now, what is ASSOCHAM? This is the Associated Chamber of Commerce and Industries of India. Now, what is CII? Confederation of Indian Industry. And last one is FICCI, is Federation of Indian Chambers of Commerce and Industry. So these are the full forms. So this is a composition of ASB, in which you have different representatives of different industries. Now, although Accounting Standard Board is constituted by ICI, it is independent. So I already explained you, this is the independent committee, though it is constituted by ICI. And NFRA also recommends this standard to MCA. So remember, non-corporate entities, we have ICAI Accounting Standard Board. And for MCA, Ministry of Corporate Affairs, that is for company, we have NFRA. So this is a basic difference between NFRA and ICI. ASB, or you can say it is as ASB and NFRA. NFRA is for corporate affairs, and other than companies, we have Accounting Standard Board. So next one, NMCA has to spell out the AS applicable for companies in India. Remember, so for corporate, we need NFRA approval also. Now what is, now you have to write standard setting process. Write down. This is concept number 3. Write down this right hand side. Don't write bodies involved in standard. It is not important. There is only Accounting Standard Board. Remember this thing. Bodies involved, Accounting Standard Board. This is very important. Standard setting process. So now, what is standard setting process? So first one, identification of area. So remember, identification of area. So write down step 1, identification of area. So friends, this area, who will identify this? ASB. Very good, beta. Very good. ASB will identify this. Where you need accounting standard. So identification of broad areas. Okay. Next one, constitution of study group. Then constitution of study group, write down next one, constitution of study group, and listen only while writing. Constitution of study group by Accounting Standard Board only to consider specific projects and prepare preliminary draft. So they will prepare preliminary draft of proposed accounting standard. For example, suppose there is one, so assume we need to introduce Accounting Standard 10 for depreciation. So for depreciation, we have first, there is a need because all accountants are writing it on their way. Means there is no standard procedure. Some are writing by 20%, 15, or some are following SLM. In next year, they are following WDV. There is no consistency. And therefore, ASB thinks there must be a consistency. So first they identified the area. Then they constitute the study group. Study group will prepare the preliminary draft. They will prepare preliminary draft and proposed accounting standard. Now this draft, normally what it includes objective, scope of the standard, definition, terms, recognition, measurement, presentation, disclosure. So this study group, they will prepare a preliminary draft. So write down bracket में, prepare preliminary draft, preparation of draft and its circulation. So we need preparation of the draft and its circulation. After that, ascertainment of views of different bodies on draft. Now this draft will be circulated on the website, and now it is asked to different bodies like MCA, SEBI, Security Exchange Board of India, C&AG, Control and Auditor General of India, that you will understand in the audit concept, who is C&AG, CBDT, Central Board of Direct Taxes, and other public enterprises. So remember, your views are taken from different bodies, and after that you will finalize, our ICI will finalize exposure draft, not yet approved. It is only exposure draft. It is not actually approved. So finalization of exposure draft, and after that comments will be received. Now it is available for general public. You can share your views. If you think it is wrong, ICI will take care for your comments, and comments received on exposure draft. After that, modification will be on the draft by the Accounting Standard Board, and finally our accounting standard will come into the picture. Final accounting standard, and then it is introduced in your study material. So इतना प्रोसेस है, ये प्रोसेस से जाना पड़ेगा. So standard setting process, first one is identification of area, constitution of study group, preparation of draft, ascertainment of views of different bodies on draft, finalization of exposure draft, comments will be received on the exposure draft, modification, and finally accounting standard will come. Okay, sir. Yes. Preliminary draft means it is in the rough format. Rough format. So Kushal is asking, sir, what is preliminary draft? Beta Kushal, it is only rough format. Yes, Jammu to Tamil Nadu. Nahi, beta, sorry, Abhijit, it is Jammu to Kerala. Okay. Sir, this class is applicable for November 2021. Yes, this is applicable for November 2021 also. Sir, when you are explaining, please tell us which topics are important for theory-based question. Yes, Bala Subramanyam ji. Yes, I will tell you. So therefore, I am giving you in writing all concepts. Next one is, sir, can you send this chapter notes? Yes, beta, I will send. Shubham ji, will there be change in the accounting standard topic for CA intermediate in every attempt? No, beta, my syllabus is not for amendment, but yes, definitely there are certain questions which are introduced by Board of Studies normally, and I have to curtail all those questions. So yes, definitely Board of Studies adding some questions. Hiral is asking, sir, will you please explain what is RMPD analysis with example? Better, we are going to solve many questions on RMPD. Every accounting standard has its recognition, measurement, presentation, and disclosure. So don't worry, we are going to solve n number of accounting standards, and in that you will understand what is the analysis. Just understand this is the analysis. This is the first day. I'm not a Rajnikant. On first day, I can't tell you all concepts in detail. Just try to understand the words. That will help you afterwards. Accounting Standard Board. Now this Accounting Standard Board, you have to understand this word here only. But RMPD in every accounting standard. So don't get worried. I will solve all your questions. RMPD will take it in detail. Sir, what do you mean by prevail? Prevail means कौन ज़्यादा अच्छा होगा. In Hindi, it is prevail means overriding. Overriding. You can tell it is as overriding. So if there is a conflict in between MC, for example, if there is a conflict between me and my wife always wins. So who is overriding? My wife. Okay, so who is best? Okay, next one. Accounting pronouncement. Yes, I will explain it later. Okay. Other queries are also okay. Have you written standard setting procedure? Yes, we have completed with the next with concept number 3. So this is concept number 3. Now let's move to next concept, list of accounting standards. So now there is no need to write all list of accounting standards because list of accounting standard बहुत बड़ा है, that we are going to take in detail. So don't worry, list of accounting standard. Just I will tell you there are total 29 accounting standards and Indians are different. So accounting standard 1, disclosure of accounting policy, 2, inventory valuation, 3, cash flow statement, 4, contingencies and events occurring after balance sheet date, 5, net profit or loss for the period prior period items, changes in accounting policy, 6, removed, 7, construction contract, 8, removed, 9, revenue recognition, 10, construction, property, plant and equipment, 11, effects of changes in foreign exchange rate, 12, government grant, 13, accounting for investment, 14, amalgamation, 15, employment, 16, borrowing cost, 17, segment reporting, 18, related party disclosure, 19, leases, 20, earning per share, 20, CFS, 22, taxes on income, 23, associates, 24, interim discontinuing operation, interim financial reporting, 25, intangible asset, 26, 27, investment in joint venture, 28, impairment of asset, 29, provisions, contingent liability and contingent assets. Plus, this is a list of accounting standards. List of all accounting standards we are going to see in all group 1 and group 2. So don't worry, no need to write all this list. You will understand definitely. You are also going to mug up all these accounting standards because you have it in syllabus. These are only names. So don't write list of accounting standards. So fatafat will complete it. Yes, 15, 16, 17, 18, 19, 21, 22, 23, 24, 25, 26, 27, 28, and last one is 29. Okay, don't worry. Okay, so list of accounting standard, we have all these 29 accounting standard. No need to worry about, sir, how to write all these, how to remember all these accounting standards is very difficult. I will take care of all this accounting standard batch. So don't worry. Now there is, yes, next, write down. Next, need for conversion to global standard. And after that, I will give you 5 minutes ka break. Huh? So need for conversions to global standard. But a property, plant and equipment is the standard number 10, and in that you have depreciation. So don't worry. Vanshika. So Vanshika accounting standard is 10, property, plant and equipment, and in that now depreciation part is introduced. Previously it was in accounting standard 6. So need for convergence of accounting standard. Now what do I mean by conversion? That we are going to see. Conversion. Convergence means now we are adopting global standards and we have our accounting standard, but now there is a need to adopt international financial reporting standard. But bhai apna ek ego hai. Yes, we are not going to adopt as it is. We will make some changes and those changes will not be called as IFRS. Those changes are Ind AS. So accounting standard which are issued in 90s and Ind AS which are issued in 2015 to make it global standard. So Ind AS are normally like IFRS. I'm not saying is as it is IFRS. So what is accounting standard? Accounting standard is our own rules which are not applicable, which are applicable to every company before 2015. But then criteria gets changing. For listed companies, they want investment of outsiders. And for having investment of outsiders, now India has to follow some IFRS. And these IFRS are not called as IFRS because we are not adopting it as it is. We are adopting it by making some changes in IFRS and therefore they are Ind AS. So if someone asks you, what is the difference between accounting standard and Ind AS? You have to answer in this way. Accounting standard are old. They are followed from 90s and 2015. Yes, Anil Kapoor ka zamana, 90s ka accounting standard. Now Tiger Shroff hoga. So that is 2015. So need for convergence to global standards. Each country has its own set of rules and regulations for accounting and financial reporting. Okay. So each country, wait, and we have to understand only accounting standard. Ind AS in detail, we have it at CA final level. So we have to study only accounting standard and no Ind AS. At final level, we are going to see Ind AS, and here you have some basic introduction of Ind AS. So remember, need for convergence. Convergence means we are following now IFRS. Why there is a need? Write down this need for convergence. Number one, convergence means we are not following as it is. Adoption and conversion, there are two words. Adoption as it is, it known as IFRS. If you are making some changes in it, it is known as convergence. There are carve-ins and carve-outs that I will explain it in the later part. But convergence means not as it is. IFRS, we are not following as it is. Okay, so need for convergence to global standard. Each country has its own set of rules and regulation for accounting and financial reporting. Okay. Now someone is asking to take lectures in Hindi. Okay, no problem. I will ask Board of Studies. Don't worry, beta. Okay, so I will use simple English only. My English is not as much as difficult to understand. So friends, don't worry. I will take line by line and I will tell you line by line. Sometimes I will use Hindi also to make it simple. Okay, comfortable. Need for convergence to global standards. So some South Indian students are telling me to take in English. Some North Indian students are asking to take me in Hindi. And there is confusion whether should I go by English or by Hindi. So here I will use English, but definitely I will provide you session in Hindi also. Don't worry. Yes, I know some students, they are finding it's difficult to understand it in English. Yes, definitely for you, I will provide recorded session. But definitely share our lectures to all of your friends, and we want to make it at number 1, our channel, because it is our dear ICI, and I am associated with ICI from last 10 years, and now ICI is giving you this at free of cost. So make it. I am requesting you to all. So private classes, ऐसा नहीं बोलो कि उनका धंधा बंद करना है. But remember, we will take it from study material and we will use simple concepts and we will make you very comfortable. So because we want it to make it at India, all over India level. So this is my request to all of you. Please, I'm not advertising, but please press like button. It will definitely motivate us. And second one, please give proper comments, whatever you think in YouTube channel also, and share it to all of your friends. This is not an advertisement which is made by me. This is only for our ICI to make it at Indian level, all over India level. So yes, definitely. Come to the point. Each country has its own set of rules and regulations for accounting and financial reporting. Next one. So to raise capital, now we want capital not over from India only. Now I want finance from US, I want finance from UK, I want finance from Pakistan. No, I don't want. So this is so to raise the capital from international markets. Rules and regulations of other country will apply to raise the capital from international market. So international investor, he wants your financial statement, but he can't read your financial statement because his standards are different and your standards are different. So for making it comparative, you have to prepare it in the one single set format, though there are some changes. That slightly changes are allowed. But remember, to raise capital from international market, we have to present our statements to make it comparable with their statements. Then only they will invest it in your company. Okay. Next one. Therefore, translation and restatements are of utmost importance in the world of globalization. Now, translation. Translation means if our statement are in Indian currency, to make it comparable with others, you can translate it in the US dollar. So foreign branches, we have to understand translation. And restatement. Restatement means first time if you are adopting your accounting index, then you have to restate your financial statement to make it comparable. Means you will apply index and then again you will prepare financial statements. So restatement means if you are adopting index, how your financial statement will look like is known as restatement. Understood? And for restatement purpose, we have to give importance for globalization. And therefore it needs convergence. Okay. Next one, international analysts and investors. They would also like to compare our financial statements with their accounting standards. And for them, we need global standards. So for international analysts and investors. Next one for international analysts and investors. Just write the two words, international analysts and investors. Okay. Multiplicity of type of S around world is against the public interest. If there are n number of accounting standards, for India different, for Sri Lanka different, Nepal different, US different, UK different, and if I'm investor, if I'm big investor, I want to invest in all companies of all countries, means important companies of all countries, then it is very confusing for me whether I follow Indian accounting standards or whether I'm following US GAAP or IFRS. And for having consistency, now there is world, there is no single country, now there is a time of globalization, and therefore we need accounting standards at one level only. So multiplicity is not allowed. So next one, multiplicity of types of S is against public interest. You can write this. Bhavya is asking, sir, how did you remember all this? Beta, I am teaching from last 10 years. So itna to aana hi chahiye na beta. So at least accounting standard to ratta marunga hai na. Okay, don't worry. So ye aapko bhi aa jayega. So Bhavya, don't worry. So multiplicity of types of accounting standards around the world. Next one. Multiple accounting standards create confusion and encourage errors and may facilitate frauds. So there is need of single standard. If there are n number of policies, there will be a fraud. Remember, and therefore to make it at one level, we need global standard. The cure is to have a single set of global standards. So that is the only purpose. So no need to write the cure and all. And to improve, yes, you can write to improve the ability of investor to compare. Yes, write down this sentence. Ability of investor to compare. Next word. Ability of investor to compare. And last one, for companies with joint listing in domestic and foreign country, the convergence is very much significant. So if you have branches in foreign and your head office in India, we need convergence. And therefore, there is need of convergence. So it's very simple to have simple set of rules all over world or global level. At global level, we need one set of rules of accounts, and therefore there is a need for convergence to global standard, and therefore India is adopting Ind AS. Remember, there is a need for convergence to global standards. Okay. Every country has not followed. Every country is not followed accounting IFRS. Some countries want their, means for example, for US, they have their own set of rules because they are rule based and we are principle based. So rule based means they are stringent, that I'm going to explain it in the later part. But remember, some countries are adopting AS and some countries are adopting the IFRS or Ind AS. Remember, Ind AS to in India only, but we are adopting not as it is IFRS, we are converting it, and therefore it is known as conversions. Adoption and conversions, there is a difference. So beta, we'll take a short break of 5 minutes, drinking water break only. So now, if you have some queries, yes, I welcome your queries fast. Okay, if you have queries, otherwise we'll take a break of 5 minutes and we'll come back. Tell me fast. In international analyst and investors, bus, right? Only international analyst and investor wants global standards. ये वाली PPT मिलेगी क्या? Yes, we will provide you PPT. Next, you please write your queries. Don't worry about your language. If you ask in Hindi, just Hindi and English. Otherwise, Marathi and Hindi, Gujarati is allowed. Other languages I don't understand. So Gujarati, Marathi allowed. I don't ask me for result and all, yaar beta. Yes, result today will be the result date. So I don't know exactly result and all. So yes, today we'll get confirmation. Definitely. I think today is the result date. Okay, Chandan. What is your query? Amruta. So it is helpful in foreign branch accounting formally. Yes. Okay. So we'll take a break of 5 minutes. Query session. We'll take it later. Thank you. Only 5 minutes break. Welcome back, friends. Your short break is over. Acha. Many students are asking, sir, if we are following Ind AS, so why there is a need of accounting standard? But I already told you there are some criterias, and that I'm going to explain it in the last part. So friends, Ind AS are applicable only to those entities who have fulfilled the criteria. Otherwise, Ind AS are not applicable. Only accounting standards are applicable other than who are not meeting the criteria. And what is the criteria? That I will tell you at the end. Okay. So there is a lot of confusion, sir, whether we are going to follow accounting standards or whether we are going to follow Ind AS. Ind AS we are going to follow at CA final level. We have to understand it at CA final level. Though all companies, all listed companies or who are in the process of listing, they are following Ind AS, but first try to understand basics of AS, bhai. If you don't understand basics of AS, Ind AS kahan se aayenge? Ind AS are normally as per IFRS, and accounting standard is our own set of rules of accounts. So these are not applicable to all companies, all Ind AS, because there are some criteria for Ind AS. Okay, so this is a confusion. Next one. Now IFRS. So let's see what is IFRS. Okay, IFRS. Wait, write down next concept. Concept number 5. Concept number 555. IFRS. Before understanding IFRS, like we have accounting standard board in India, there is International Accounting Standard Board, which is known as IASB. So there is International Accounting Standard Board, which is outside India. Okay, so we have Accounting Standard Board. On the same ground, there is IASB. Now this IASB, when it formed in 1973 in London. So this is a London-based group with the objective of setting global standards. Their objectives is very simple. They don't want only national accounting standard. They want global accounting standard, and therefore they formed one committee, London-based group board named as International Accounting Standard Committee. So remember, ISB is name which is replaced afterwards. In 1973, there is a word IASC. This is a committee, not board at that time. After they converted their name from committee to board. Yes, very good. So this is London-based group named the IASC, which was established in 1973. Okay. Yes. Akash Kumar, I will explain what is restatement at the end. So wait for some time. Reinstatement, I will explain it at the end. Now let's understand what is ISP. So London-based group of accounting standard. This is IASC in 1973. IASC comprised professional bodies from 75 countries, including India. So we are members of IASC in 1973, from 1973. And this is including India, ICAI, and IASC restructured their organization, which resulted in formation of IASB. So I already explained you, previously it was IASC and now it is IASB, in International Accounting Standard Board. So write down, you can write it. Previously it was IASC and now it is IASB. Now remember, IASC has issued internationally accounting standards. IAS, they issued international accounting standards. And remember, IASB, they issued IFRS. They issued IFRS, which is next to International Accounting Standard. I will tell you all numbers. But remember, up to 31st March 2001, standards issued by IASC is known as International Accounting Standards. So for IASC, International Accounting Standards. And for IASB, it is IFRS. IASB, it is IFRS. So IASB and IASC. For IASC, it is International Accounting Standard. And for International Accounting Standard Board, after 1/4/2001, it is IFRS. It is next to IS. They continued the list. But suppose if they want some changes, for example, if they need, there is need for share-based payment. There must be accounting standard on share-based payment. So they introduce IFRS number 2. Previously, there was no standard. Then they introduced one IFRS number 2. Then they have IFRS number 3 for business combination. So there is also one list that I'm going to explain you. The list is not important at intermediate level. I remember all names of this list. So just a group 1, I remember all accounting standard. Similarly, I know all IFRS numbers also, because I studied it from last 4 to 5 years. And therefore, IFRS numbers also, I'm aware of all IFRS number, because now I am a teacher at final level also. So I have to remember all these accounting standard numbers at least. Okay. So IFRS, I already explained you, IFRS is in International Accounting Standards, which are issued by IASC, and IFRS, which are issued by ISB. So now your difference is definitely, you remember the difference. IFRS issued by ISB, and interpretation. Remember, now there is need of some interpretation. I explained you 1 hour before what is qualifying asset. What is qualifying asset? Which takes that qualifying asset, you have in accounting standard 16 an asset which takes a substantial time to get ready for its intended use. Now what is substantial time is not given by accounting standard. Substantial time, it might be 2 months, it might be 4 months, or it might be 1 year. And now this substantial period is not given in any accounting standard. And if suppose, if any information is not given in accounting standard, it will be issued by interpretations. So there is interpretation on this substantial period, and substantial period means 1 year. It is not given in accounting standard, but it is given in the interpretation. And if it is given in the interpretation, it is known as IFRS Interpretation Committee. So suppose if some information is not given by accounting standard, in that case, it is given in the interpretations. So I hope you are clear with the interpretations and what is accounting standard. So IFRS Interpretation Committee is also there. And this interpretation committee gives you all interpretations. Okay. Now, what is IFRS? Now there are two concepts. One is principle based and one is rule based. Principles means they are more open, and rules means they are stringent. They are strict. You can say it as strict. Stringent means it's strict. So some accounting standards means, for example, US GAAP are more strict because they are saying you have to follow as it is only. And IFRS says, no, you may follow your own set of books, but within this limit, criteria, within these guidelines. But they are more principle based. And if they are more rule based, it is US GAAP. India is a mixture. We are also principle based and we are also rules based. So remember, IFRS are more principle based. Enhanced transferability and comparability. Okay. And it is emergence as global standard. In simple language, I am explaining you. Suppose if your father is stringent, if he allows you only up to 7 p.m. to come at home. So these are some stringent rules. But sometimes some students' parent, they are flexible. They allow you to come up to 9 o'clock. And कुछ स्टूडेंट्स तो 1-2 बजे भी घर जाते, कोई बोलता नहीं है उनको. So ये more principle, rule based is US cap. It is saying like you have to come before 7, otherwise doors are closed. So you have to follow all guidelines stringently. But if these are flexible, it is like IFRS in simple language. Okay. Interpretation, I already explained you what is interpretation. That substantial time means how much is given by interpretation. Okay, so interpretation means substantial time limit is given in interpretation and not in accounting standard. If it is not in accounting standard, it is given by interpretation committee. Okay, so you understood what is IFRS. IFRS are principle based. Are rule based or principles based? Very good, it is principles based. Next, now become IFRS compliant. If any country wants to adopt IFRS, now remember, this is very important, write down, becomes IFRS compliant. Compliant means you have to adopt, you want IFRS. So IFRS compliant means by adoption process. One is by adoption process and second one is by conversion process. By adoption process and by conversion process. Write down. By adoption process and by conversion process. Adoption process means you are following IFRS as it is, purely. There is no change in IFRS. There is no deviation from IFRS. You are following it as it is. And if you are making some changes in it, it is known as convergence. By convergence process. Partially change in IFRS. We are not following it as it is. We are giving some changes. And if they are partially changes, it is known as conversion process. Okay? So I hope you are clear with the concept. What is the difference between adoption and what is the difference between conversion? Adoption means as it is, this is purely IFRS, and conversion means there is a partial change in the IFRS. Okay. Bansal ji, thank you. Sir, your way of teaching is very best. Thank you. If you give such compliments, really means मुझे ऐसा लगता है कि और अच्छे से पढ़ाऊं और एनर्जी आ जाती है. So thank you for giving such type of comments. Okay. I hope you are clear with the concept. Now there is a concept which is known as carve-ins and carve-outs. Now, what is carve-ins and what is carve-out? Carve-outs means you are making some changes, you are excluding some part. If you are excluding some part of IFRS, it is known as carve-outs. But wait, there is a difference. Carve-outs, you have to understand what is removal and what is deviation. And carve-ins means additional guidance. So we'll write it afterwards. Don't write it. Carve-ins and carve-outs, we will write it afterwards. Okay. So now, what are benefits with the conversion? Conversion means whether India is adopting. Tell me in the comment section fast. Whether India is adopting as it is or whether India is not adopting as it is and they are converting it into, there are some changes into IS, International Accounting Standard or IFRS. Tell me fast whether we are adopter or whether we are converge it with the IFRS. Tell me. Tell me fast. Convergence or adoption? So correct answer is convergence. And therefore we never named it as inter IFRS. We named it as Ind AS because we are not following it as it is. Okay. So what is the benefit? Like, if there is benefit, there are 4 benefits of accounting standard. Similarly, there are benefits for converge with IFRS. Number 1, cross-border flow of money. We need money from outside market, international level financing, OTC, over-the-counter platform, and international investors, QIBs, qualified institutional buyers of outside India. And therefore, we need to adopt global standard, cross-border of money. Write down. Okay. Yes, beta, you are correct. All of you are correct. We are followers of convergence. Cross-border flow of money. Global listing, because now our companies are listed with National Stock Exchange either or Bombay Stock Exchange. But suppose if we were to enter into UK Stock Exchange, New York Stock Exchange, in that case we need to follow global standards. Our companies must fulfill with all conditions which are given by global standards. And therefore, for global listing, we need to follow we have to follow global accounting standards, IAS, and for global listing is the second one. Next one, for comparison, that is we know already. Comparison is same in AS also and Ind AS also. So same benefit with IFRS. So comparability of IFRS. Very good, very good. Elimination of costly requirements. Suppose if you are Indian company and you want to invest in UK, assume, and you want listing in UK, in that case you need accounting standards. Your financial statement will be presented in accounting standard way, and then you have to convert, which is known as reinstate. So now that question is covered. Reinstate means if you are following IFRS, how your financial statements will look like. And this is known as reinstatement. Reinstatement means we are follower of accounting standard, and now I want to move to IFRS, then my figures will be reflected as is known as reinstatement of financial statement. So reinstatement means if you want to move to other accounting standard. And suppose if you are following global accounting standard, whether there is need of changing your accounting standard, your financial statement, your financial statements are presented in the global standard way only. And therefore, this is the elimination. Otherwise, 2 accountants you have to appoint. One is, if you are Indian company, you have to appoint Chartered Accountant of India and then Chartered Accountant of UK. Oh my God, this is very elimination. This is a costly process. And this gets eliminated due to convergence with IFRS. So next benefit. I hope you are clear with the concept. Next one, enhance accountability. Means importance. Enhance accountability. Okay. Greater transparency. More transparent books of accounts, more transparent your financial statements, reduce operational challenges, and accounting standards itself mentions all policies. So there is lower risk of judgments. So beta, these are benefits. So write down all these benefits one by one. Cross-border flow of money, global listing in different stock markets, comparability. Please maintain your concept book properly. This will help you at the end. Mark my words. Today you won't understand the benefit of maintaining your concept book. You'll understand all these at the end, and then उस time पे पता चलता है it is very difficult to revise all concepts, and then our notebook will definitely help you. So maintain it properly. Red pen, green, black pen, all important adjustment. Calculators, very, very important weapons. Okay. Yes, Amrisha is saying, sir, we are de-investing all our investments and how this will be helpful. Beta, okay, we have to pass our exam. What is going in the actual world, it is different. First take your degree and then you can go with Sitaramanji and take decisions. Don't worry. Okay. Yes, jokes apart. Yes, Renuka, nahi, Rashi Sahal. Okay, Rashi Sahal. Thank you for your compliment. Sir, it's true, sir. You are making this theory so interesting. Before starting the class, I thought it would be boring, but you completely changed my mind. Okay, thank you, Rashiji. So nice of you. Yes, next one. Next process. Now, after convergence to IFRS, next concept very, very important. जिसके लिए आप इतने देर से राह देख रहे थे. What is the conversion of IFRS we have completed? Wait. Now convergence and after that Ind-AS. Very, very important. Convergence to IFRS in India. Whether India is following? No. हमने already देखा. India is not adopting IFRS as it is. We are convergence into the IFRS. Application of IFRS in India considering legal and other conditions prevailing in India, and therefore we are not following IFRS as it is. There is some deviation if required, and if some deviation, then it is known as convergence and not adoption. ASB in consultation with MCA decided to have two sets of accounting standards. So in India we have accounting standard and Ind-AS. बस इतना आ गया, मेरा तो काम खत्म हो गया भाई. आज का सेशन बल्ले बल्ले है, तो ये याद रखना. मेरा एक बहुत अच्छे से आपने बताया. So Ind-AS and accounting standard, ये two set of accounts we are following. Okay. Next one. Concepts of Ind-AS. Concepts of Ind-AS, very, very important. Ind-AS. Now write down all these sentences. Now there are certain carve outs. Now what is carve out? We have to understand the word what is carve out. Ind-AS are IFRS converse standards issued by central government with certain carve outs. And what is carve out? We have to understand. Steps for notification. Okay. Steps for notification. Remember, for any Ind-AS, write down fast. I'm waiting for you. Again, how to adopt it? Steps for notification. First, anything you want to introduce in accounting standard, first you have to formulate it in the accounting standard board. Sir, that committee setting up process, very, very important. Formulation by accounting standard board of ICAI. And then it is sent to, because this is applicable normally to company, that I'm going to explain you in the next slide only. So sent to NFRA. And if there is MCA role, MCA in accordance with consultation with NFRA. जैसे अपना ICI MCA का guidance देने वाला NFRA. Who is consultant of MCA? Ministry of Corporate Affairs का consultant is National Financial Reporting Authority. NFRA is a consultant for accounting standard. For whom? MCA. And for others means sole proprietor, partnership, then your AOP, BOI, and cooperative societies and others. For them it is apna Institute of Chartered Accountants of India. For others, okay. Next. And then it is sent to central government for notification. So steps for notification are very easy. Formulation by Accounting Standard Board of India. Ind-AS are followed. Who is preparing this? Accounting Standard Board. Then it is sent to MCA. But they have consultation with their consulting agencies, NFRA. And NFRA will approve. Then MCA will approve for corporate affairs. Other than that, Apna Institute. Okay. So steps you understood. Now what are benefits? Benefits are number one. This is Index benefits. Number one, globalization and liberalization. This is common sense. Now for global accounting standard, we are following this. Therefore, this is globalization and liberalization. So these are benefits. Transparency. Then next is a comparability. Next one is enhanced disclosure requirement. All four are very easy. Globalization and liberalization, transparency, comparability, enhanced disclosure requirement. Okay. So benefits, we have completed with benefits. Now next one, Indes. Now very, very important. Indes are named in same line, same number as IFRS. If IFRS number 1, we have number 101. 100 numbers behind. Remember, 101. And their number is 1. So IFRS 1 means India ka 101. IFRS 2, India ka 102. Okay. Now, Indes are named and numbered as corresponding to IAS, International Accounting Standard. But I explained you, previously they had International Accounting Standard and then they introduced IFRS. So now very, very important point. Previously they had for international, try to understand. At international level, okay, at international level, it is IFRS. But IFRS previously it was IAS and then it is IFRS. They have not changed IAS number. IAS number they have not changed. And then they have given new numbers under IFRS. Means IAS is there. International Accounting Standard is there. And then they have given new numbers to IFRS. Sir, please give us numberings. Please tell us about numberings. Yes, wait. Now numbers are. So this initiative I will tell you later. Yes. Now look at this number. Ind AS 101. Ind AS 101. Yes, we have list of numbers in study material only. I will give you numbers. In study material, it is given in the very clear way. Now in India, we have 101. Now 101 reflects to IFRS. 100 numbers means it is IFRS. 100 ka series is IFRS. 100 series is IFRS. 100 series is IFRS. And 1, 2, 3, 4 series is in IAS. So IFRS is by International Standard Committee Board, IASB. And IAS by IASC. C. For committee, it is IASC. B for IFRS. So, you can see here it is IFRS 11. Numbers are not important. The series is important. In 100, it is IFRS. And if you see 1, 2, 7, 8, this is for International Accounting Standards. So previously it was IAS. And after this, IFRS. IFRS ka Indian number is 100 ka series. 100 series is Indes. For IFRS, equivalent to IFRS. And for International Accounting Standard, you can see our 1 and IAS 1 are same, presentation of financial statement. Our 2 and their 2 is same, inventories. These are not AS, these are Ind AS. Ind AS. Ind AS, what is Ind AS? That I'm going to explain it in the next slide. Ind AS are different from AS. Okay, now don't have any confusion in the mind. Accounting standards are different, Ind AS are different, and Ind AS are based on IFRS. Kitna confusion. IFRS is with IAS. And IAS number 1, our also number 1. IFRS number 1, our number 100 ka series. Okay, now we understood, sir. What is IFRS and what is I? Sir, whether we have to learn all these numbers? No, my friend, at CA final level, you will understand all these numbers. This is just in your syllabus. Yes, just go through it. Otherwise, it is of no use because institute will never ask you questions based on Ind AS. But yes, Ind AS ka applicability, they will ask you. They will ask you when Ind AS are applicable. But what are numbers of Ind AS is not important at intermediate level. For final level, you have 100 marks ka syllabus, bhai. So beta 100 marks ka syllabus you have only of Ind AS. So we have to understand only names, only series number. Okay. So now we are clear with the concept. Now move to next slide. These are numbers. I remembered all these numbers and I'm not going to waste my time in saying all the list because it's of no use. Okay. S is important for you. Accounting standard names are important for you. So these are some numbers. Okay. What is carve out and carve in? Write down fast. We have only 10 to 15 minutes and then we have question answer session. Yes. Now you are clear, Manoj ji. Manoj ji, you are clear. Ind AS converge based on both IAS and IFRS. Yes, correct. You are 100% clear now. Now carve outs and carve-ins. Carve outs, write down. Carve outs means departure, departure, departure. It is decided to converge and not to adopt. I explained you what is the difference between convergence and adoption. So we have converged our accounting standards, IFRS, into Ind AS. And this departure is due to, now remember this chart is very, very important. Due to change in terminology. Why we have on said? Because there are some names which we never liked. We like these names, our names only. So change in terminology. Removal of options. Now remember, removal options and deviation in principle. Write down all these three and then we have to decide whether it is carve out or whether it is not a carve out. Yes, now all confusion clear. Nitish says, very good Nitish. Sneham, thank you beta from Bangalore. Punjab say, IFRS series, beta IFRS series is na, don't worry. IFRS series is based on 1, 2, 3, 4 and Indian series is 100, 101, 102. And IS series is 1, 2, 3, 4 and Indian series is also 1, 2, 3, 4. So don't worry, don't get confused. Try to understand. Institute may ask you what is carve outs and carve ins. That is more important. Carve outs and carve ins. Numbers are not important at all. That is only for general knowledge. Okay. So change in terminology. Write down. Have you written all these three? Yes. Kiti Edgar. Okay, sorry, there was no voice. Okay. Remember, what is carve out? Carve out, they will ask you in the exam. So concentrate. Carve out means kya? So carve outs means due to change in terminology. In change in terminology, we use the word profit and loss account. They use word statement of comprehensive income. IFRS uses word. We use word balance sheet. They use word statement of financial position. And these words, we are using our same words which are applicable from last many years. We are using the same word balance sheet and we are continuing with the same word. We are not using their words. Okay. So outside India, living relation is allowed. Nowadays, many students, not students, but many people, they are in living relation, but we were against, oppose, or so related party definition. We still have husband and wife, and not any living partner. So they are using word living partner. We use word husband and wife only. So that is the basic difference between terminology. I'm not joking. This is correct. These words are used in IFRS. So they never use word husband and wife. कितने भी छोड़ते रहो, कोई problem नहीं है. But in India, यार, we stick to one wife. Though we won't want. Okay. So change in terminology. Example. Write down example in IFRS statement of comprehensive income, but in India's it is statement of profit and loss account. Okay. Okay, sorry, there was a sound problem. Yes, sound problem. Now everyone is audible for everyone. Yes, now it's audible. Statement of financial position. It is the balance sheet. Financial position is a balance sheet. Remember, in IFRS, it is financial position. In India, this is balance sheet. So this is one of the carve out. But remember, if we remove any option, this is not carve out. This is not carve out. Remember, this is very important. If it results in carve out, no. There is deviation, it is allowed. If we remove any carve out, for example, if I removed the straight line method from the index, then it is not carve out. But if there is a deviation, means the IFRS says something different and Indian standard says something different, there is only deviation. In that deviation, it is carve out. So removal is not carve out and deviation is carve out. Be aware of ma'am. Yes, Kumar ji. मैम का टेंशन है ही मुझे, बीवी मारती है मुझे. So deviation to accounting principle stated in IFRS. Yes. काश इंडिया में भी ऐसे अच्छी चीजें होती बाहर के जैसे. ओके, चलो नेक्स्ट वन. अभी तो मैं बूढ़ा हो गया, चलो ठीक है. ड्यू टू डेविएशन to accounting principles stated in IFRS. It is carve outs. It is known as carve out. So removal is not carve out. Deviation is carve out. And remember, what is carve-ins? Carve-ins means additional guidance. Additional guidance given in the index than IFRS. Means there is nothing in IFRS, but we have additionally guided. There is a merger method, which is in business combination. This is in India and not outside India. So that is the additional carve-ins, which is not in IFRS, but in index. So additional guidance is known as index. Carve-ins. Carve-ins. Now last part. Please keep 10 minutes ka patience. I know now you are hungry. Yes, Nandaji, you can listen it again because now we are available on YouTube also. But more than recorded session, live sessions are preferable. You can ask query and I will answer it at the end. So please be active in live classes. Okay, so additional guidance given in NDES. I hope you have written this. So carve out means changes. Yes, very good. Deviation means changes. Yes, who answered it? Parveen. Correct hai beta, correct hai. So now carve outs and carve-ins you understood. So formulation of index, if it is deviation, then departure resulting into carve outs and not resulting into carve out. When it results into carve out, when removal or deviation. Very good. If it is deviation and if it is removal, carve out. So write down this summary. This is the end of carve out and carve-ins. Yes, you understood it now. So yes, I will skip this slide. Okay. Last part, now important part. Sir, when to adopt Indes? When to adopt Indes? Roadmap of adopting Indes. So what is the roadmap? Let's understand the roadmap. For companies other than banks, NBFCs, non-banking financial corporations, and insurance companies. For other than that, for example, Tata, Reliance, all are these are not other than banks, NBFCs, and insurance companies. They may have their NBFCs, but we have to understand their structure of companies is other than banks, NBFCs, and insurance companies. So when they are adopting, write down this chart. Up to 1st April 2015, from 1st April 2015 up to 1st April 2016, it is on voluntary basis. Means if company wants to list their shares on other than Indian stock exchange, or they want to follow voluntarily, there is no compulsion. Compulsion is after 2016. So in 1st April 2015, if they want to present their financial statement under Ind AS, they are voluntarily allowed. Voluntary basis, there is no compulsion. Voluntary खुद से कर सकते थे. So 1st April 2015 with comparatives. Comparatives means last year. Comparatives means you will compare your statement. For example, if I want to compare my performance for 31st March 2021, I will compare with 31st March 2020. So that is comparatives, with comparatives. Okay. Okay. Now phase 1. Phase 1 2016, 1st April 2016, from phase 1. Then phase 2 is for 2017. And then, yes, there is some criteria. So write down, this is not voluntary, this is compulsory, mandatory. This is mandatory. So when it was voluntary, it was in 1st April 2015. And after that, it is mandatory. After that, it is mandatory. Yes. Examples of carve-outs means there are many carve-outs means n number of carve-outs you have to understand at CA final level. So remember only these words. If it is deviation from the IFRS, then it is known as carve-out, and if it is removal, no carve-out. If it is removed in Ind-AS, if I go in detail, this is syllabus of CA final. Just you have to understand what is the meaning of carve-out and carve-in, but that's it. So don't go in detail. Sometimes I will restrict yourself to syllabus part only. Otherwise, I have a lot of information to share with you. Otherwise, our portion will not get completed within time. So friends, please stick to your syllabus. Remember, there are many concepts which are interesting, but it is not in your syllabus. So please stick to your syllabus only. Okay, mandatory basis, you got the concept. What is phase 1 and phase 2, that we are going to see. So voluntary basis, when it was voluntary, 2015, and when it is mandatory, from 2016 it is mandatory. So for whom it is mandatory? Now this is very something interesting. If your net worth is greater than 500 crores, if your net worth means equity share capital plus preference share capital plus resource and surplus, that we have to understand at financial management. Net worth, we will cover it in financial management, means your respective teacher. So net worth, now there is a definition of net worth. We are not going to see it in detail. Net worth in simple language, it is capital and resource and surplus. It is not turnover. It is not turnover. Listed companies having net worth is greater than 500 crores. Listed means listed on stock exchange. You can exchange your shares by online demat account. You can sell your shares and you can purchase your shares, is known as listing. And unlisted means it is not available on stock exchange, but it is available to public by taking these shares on stamp duty paper or in any stamp duty paper, or you can sell it or you can purchase it, but not listed on stock exchange, not on terminals of National Stock Exchange and Bombay Stock Exchange. That is listing and unlisting. So you got the difference between listing and unlisting. I hope these concepts are clear at foundation level only. Okay. So in law, okay. So listed companies having net worth of greater than 500 crores and unlisted companies having net worth of greater than 500 crores, and holding means parent company, subsidiary matlab child company in which you have 50% or more shares, or associates are and joint venture. Associate means having substantial voting rights, means 20% and all. That is the criteria. And joint venture, that we are going to see it in the holding subsidiary, we're going to see it in the advance accounts. So any above company ka holding, subsidiary, associate and joint venture, for them also this is applicable. So remember, net worth is greater than 500 crores. Okay. Now, listed companies which are not covered in phase 1, means though which are not, for them it is applicable from 2016. You can see for 2016 it is applicable. From 2017, having net worth of less than 500 crore but greater than 250 crores. So 250 to 500 criteria is applicable from 2017. Roadmap, they may ask you roadmap of Ind AS. You will get such questions. And holding and subsidiary of the above. Listed companies not covered in phase 1. Means every listed company has to present their statement in the format of Ind AS. So each and every company now, they have to follow Ind AS, though irrespective of their net worth, 500 or less than 500. It is not 250 crores. Any single net worth also covered under Ind AS. If you see any report, any company's report, now from 2017, it is mandatory to apply Ind AS. And students, I'm telling you, to convert accounting standard into Ind AS, you will get a great opportunity and you will earn like anything, because many people, they are not aware of this Ind AS, and this is not the traditional practice like direct tax and indirect tax. So this is something very interesting, and if you have thorough knowledge about Ind AS, definitely you will get a good opportunities in future. So please try to understand all these accounting standards in detail. So phase 2, listed companies not covered in the phase 1. Unlisted companies having turnover greater than 250 crores and holding and subsidiary of the above, they are covered under phase 2, and the applicability is from 1st April 2017 only. Okay, for NBFC non-banking financial corporation, so ये non-banking you have means Muthoot Finance वगैरह सुना होगा आपने, all these are covered under NBFC, Bajaj Allianz वगैरह. So for them it is from 1st April 2018. Write down this 18 and 19. So for 15 voluntary. Remember how to recall: 15 is voluntary, 16 more than 500 crores. After that, 17 is any listed company, and 250 to 500 for unlisted company. And for NBFC, it is 2018-19. For 18, it will be more than 500 and holding and subsidiary, and less than 500. And for unlisted, it is 250 and 500. So similar concepts for NBFC from 18 and 19. So NBFC, when they covered in 18 and 19. I hope you are clear with the concept. For NBFC, many students, I think they have short of their recharge. So please recharge at least for 3 GB or at least 2 GB and listen it carefully daily. If you come in the live session, we'll definitely enjoy. After that, in recorded session, it is very difficult because we'll get bored and we think, yes, हम लोग बाद में देख लेंगे, but it is not possible. बाद में कोई देखता नहीं है. So it's better to sit in the live session. You ask questions, be interactive in the session. And we also enjoy in live sessions, because now in front of me, there are only 5 to 6 students because of Corona, and it is not allowed still. And therefore, it is very difficult for us to conduct live sessions also. And if you are interactive in the live session, it is really great for us also. Okay. So with comparatives, NBFC same 18 and 19, you have to write both. For 18, if NBFC having more than 500 crores listed or joint venture and all this. Yes. And anything listed after that, if it is less than 500 crores from 19, it is mandatory. So similar for NBFC, it is similar to your companies, which is in 16, 17, same is applicable 18 and 19 for NBFCs. NBFCs, you understood what is NBFC? Okay. Yes. And now last part. Roadmap for non-banking financial corporations. Unlisted NBFCs having net worth is less than 250 crores shall not apply. Voluntary adoption of Ind AS is not allowed for remember, NBFC cannot voluntary who will apply? It is very difficult to apply. So NBFC ulta they want extension. Okay, but now this is not voluntarily applicable for NBFC. And remember, for schedule bank, I won't don't write it in detail. Insurance company, schedule banks like commercial banks, उनके लिए अभी भी applicable नहीं है. For schedule bank, commercial banks, including rural banks, these are not applicable. SBI, HDFC, Indian Bank, for them it is not. HDFC is covered under NBFC, so this is nahi by SBI or Indian Bank or any other banks listed national banks. The Ind AS are not applicable. Why? Because initially it is required from 1st April 2018, but now this is deferred to till further notice. You can see here RBI deferred implementation of Ind AS because it is very tedious process, boss. It is very difficult, and to apply Ind AS is really, it's hectic also. And urban cooperative banks and regional rural banks are not required to apply Ind AS. For insurance company, it is not yet applicable, beta. So here they have not yet Ind AS are not applicable. Remember, so for insurance company, and would be finalized only after IFRS 17, means Ind AS 117. They are 17, our 117 for IFRS. Now, fatafat, test your knowledge. Tell me, this is test your knowledge. If you are clear with all concepts, now try to solve all these questions. So, number 1, accounting standards for non-corporate entities in India. Non-corporate entity. Who issues accounting standards? Very good. Not NFRA with consultation. MCA nahi. This is our dear ICAI. So first answer is C. Next one. Accounting standards. Harmonize accounting policies, eliminate non-comparability of financial statements, improve the reliability of financial statements, and both A and B. So accounting standards, both A and B. Correct? Okay, so accounting standards both A and B, harmonization and improvement of the reliability. I hope this question is covered at foundation level also. It is essential to standardize the accounting principles and policies in order to ensure. Why there is a need? Transparency, consistency, or both. So transparency also and consistency also. So both A and B. It's very simple. Which committee is responsible for approval of accounting standard and their modification for purpose of applicability of the company? Which committee? Remember, committee, Indian committee. ASB, Accounting Standard Board. This is Accounting Standard Board. So this is not, and company. Okay. It is for company. Okay, for company it is MCA. Yes, correct. For committee is responsible MCA. For company. For their company, and non-company is ICAI. Yes, for company it is MCA. Global standard facilitate. Cross-border, yes. Comparability, yes. Both A and B, yes. Both A and B. Additional guidance. Remember, carve-outs or carve-ins? Yes, additional guidance is carve-ins. Yes, now we remember all this concept. ISB stands for International Accounting Standard Bureau Board, or it is Advisory Standard Board or Accounting Standard Board. Very good. This is Account Board. And IFRS stands for International Financial Reporting Standard. And last one, phase one. Remember phase 1, turnover or net worth? Net worth is greater than 500 crores, all listed. Companies having net worth of rupees 500 crores or listed, both. And this is the last question of your TYK, and we have completed all test your knowledge question. If you can solve all TYK, then my lecture was rocking lecture. Okay, means you understood everything. Now this test, today's brain gym, I'm not going to take this because these are some entries. I will ask you whenever I have some time at the end. I will tell you all these journal entries, all important journal entries to write it in the homework. So this is all for today's session. If you have query, yes, thank you for first session of accounts. If you liked it, please share it with your friends and please please press like button. This is my request to all of you, not from Board of Studies, from my personal point of view, to boost my energy. Okay. So please ask questions if you have any question. Okay. So we'll solve some theory questions, and all students who are watching up to end, yes, beta, you are going to pass in the first attempt if you follow my instructions. Sometimes you may feel it's very difficult to pass or it's very difficult, but please attend it 1 to 2 times. Then definitely you'll get a success. And those students, okay, so just I will read all comments. Respected sir, your explanation and making concept point wise very clear and easy way to understand and learn. Okay, thank you so much for virtual lectures. Yes, Hetvi, thank you. Hetvi Dave. Sai Vaishnavi, Hyderabad, sir, your teaching is exceptionally best one till now from ICI. Thank you, sir. Please, just a small doubt. Is it sure, sir, we will be completing the whole 2 group syllabus in 2 months? Yes, beta. And thank you. I'm getting the last comment. Okay, so this explain objectives I already covered. Process of issuance index, yes, I already covered that roadmap. Then we have emergence, yes, covered. And what is carve out and index in index, it is also covered. So we completed all theoretical questions. If you are clear with all concept, please write it in the proper notebook. I am telling you it again and again. Please maintain your notebook from the first day, and whatever guidance I am giving, write it properly. Sometimes it may happen that because of short of time we will solve only some questions, but definitely we will provide you recorded lectures for my subjects. I don't know, I will ask to Board of Studies for other subjects, but suppose if I think this is a short time, in that case I will provide you a recorded session. So don't worry. Kumar Rohit, sir, thank you for your time. Nahi beta, it is my duty. Sir, can I listen it again in the class? Yes, beta, you can listen it in the class. Sir, your way is teaching effective. Thank you. Sir, will portion be over? Yes, that's why I told you, if suppose I think the portion is not getting over, in that case, I will provide you recorded session. Okay, and we will take some live classes also. Means I will come on YouTube live and we will discuss all your queries. So don't worry about it. Portion, I will take care to complete your portion. So last headings I could not understand on out of the it only could correct. I don't understand what she wants to take. Benjamin. Okay. Nice and lovely class. Thank you. Yes. Catherine, sir, thank you. Yes, thank you. First time she understood the theory. Thank you for beautiful session. Please, sir, continue lectures for whole subjects. We don't want other lecturer. Okay, beta. Sir, thank you for giving us valuable time. Thank you all. If you have any other query other than this, please tell me regarding subject, regarding topic, and I will give you, suppose if I say allows me to open you Telegram channel, I will share all notes on Telegram channel. Otherwise, we will provide lectures at the end on YouTube only. I will provide it in the description box, a link for this. Okay. So thank you once again for all of you, and this is bye bye. दुआ में याद रखना, कल वापस मिलेंगे. Thank you.